Great, fantastic. Before I start, I want to ask you guys a favor. I'm going to do a little quiz. Just have that on. Who likes a little quiz? Yeah? Come on, we can try it out. Everyone up for a quiz? Yeah. All right, let's get back those slides up, guys. So the first slide is, let's get that up. Oh, I got to press forward. There we go. So, who said this? If you guys know this, just say it out loud, okay? Just, not Gordon Gekko, no. Be fearful when others are greedy, and be greedy when others are fearful. Who said that? Warren Buffett, well done. Who is Warren Buffett? Yes, he's the world's richest share investor. Okay, remember his name, by the way, because I'm going to come back to this guy in a few moments. So what we're going to talk about today, guys, we're going to talk about how to profit from a crisis, all right? So that's what we're talking about. Okay, who said this? Okay, second question. Who said the way to make money is to buy when blood is running in the streets? By the way, last time I came to Manchester, I asked this question about a few months ago. Someone said in the audience it was Dracula. It wasn't Dracula. Now, what do you guys think? I'll give you a clue. It's supposedly one of the guys, one of the families, the big families in the world who controls the world. It's not the Rothschilds. Who do you think it is? Not quite. It's Rockefeller. Oops. Sorry about that. I think the way this presentation is done is a little bit skews up the screen. Anyway, yes, the way to make money is Rockefeller. He's an American oil tycoon, supposedly one of the guys who built America. All right. And who said this? I go to bed every night dreaming of another recession. Governments don't rule the world. Goldman Sachs rules the world. Right. By the way, this was back in 2011. They invited me on a live television program on the BBC. It was about in the afternoon. So there was a lot of financial things happening at the time. Markets were going down. There was a talk of the Eurozone splitting up. And the lady over there, Martine Croxall, asked me on live television, so how am I going to fix it? And I said, I'm not looking to fix it. And I just said what came to me honestly. And I'm going to explain to you exactly why. One thing happened was, by the way, that within 24 hours, I had every television network around the world, from Washington, from CNBC, Bloomberg, to Israel, to Australia, calling me and basically wanted to do an interview with me. Even Piers Morgan and David Frost were calling me up to do an interview. And I got a call from Forbes magazine the same day, because the video of this went viral. You can find it on YouTube anyway. And this reporter from Forbes magazine said, hey, listen, Alessio, we want to do a positive report on you. Don't worry, nothing negative. Positive news story on you. Give us some information. So the next day, the article was published. Everybody saw this. And here it is. Stock traders are psychopaths. I thought, man, she sounded so nice on the phone. So she says today, Alessio Rastani, blah, 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 admitted honestly, you know, all that kind of stuff. Anyway, I think what really shocked people most about this interview wasn't just what I said, but the fact that it was, well, they said it was an honest interview, and that's what I wanted to do. People said I did it for effect, not true at all. I genuinely did not believe the video would go viral, anybody would pay attention to it. So next day, a few other papers called me a psychopath, and even the BBC tried to protect. But the bottom line is, folks, it's a picture of me where I do majority of my research. You know, I'm sure most of you are probably thinking, well, surely what you said was immoral. It wasn't morally right to say you're dreaming of another recession, even if most of you probably agree with the fact that governments don't rule the world. It's the big corporations, the big banks, JP Morgan, Chase, Goldman Sachs. But why did I say that I'm looking forward to the next recession? And by the way, I just want to make sure you guys understand, I did not mean what the papers said, which was that I was happy about people losing their jobs. Not true at all. I want to explain to you what I actually meant. And you might be thinking, well, is it even moral? Is it a moral thing to profit from a next crisis? I think of it like a hurricane, you know, coming towards you. Famous one in 1987 came to this country. There's plenty of hurricanes coming to America all the time. And, you know, what do you do if a hurricane is coming to your destination where you live? Well, the first thing, I'm sure you agree with me on this, is that you protect yourself, protect your family. All right? It's about being prepared. If a financial storm is going to come, and there will be another financial storm, by the way. I'm going to show you why I believe the next financial storm will be this year, 2014. I'll show you why. But the next financial storm that comes, most people, I'll say 90% of people, are unprepared. Would you agree with that? Yeah. In 2008, so many people lost money in stocks and property because simply they got stuck in a bubbles phase. They thought there was maybe, they were in denial that there would ever be a crash. Anyway, so I want to share with you a big major lie. This is a lie which I can tell you almost every person that you know believes in. You might believe in it too. I used to believe in it. And it's not your fault if you believe in it because, let me say this, this lie is perpetrated by the media. Remember this, by the way, guys. There are two types of information. There are two kinds of information. Information for the masses and information for the classes. Okay? It's what you want to know is information for the classes, not what the media are saying to you. Because the majority of the stuff the media tells you is completely wrong and useless. Here's the lie. If the economy is doing better, so the stock market should do better too. By the way, if you ever hear any person, any economist saying those words on television, you know he doesn't have a clue what he's talking about. It's actually the opposite. You might think that's a bit strange. Why would that not be true? Okay, let's talk about that. Fact is, guys, there's no correlation between the economy and the stock market. None whatsoever. Let me show you. Warren Buffett, again, world's richest share investor, he doesn't even care about what the economy is doing when he buys stocks. He doesn't pay attention to things like unemployment reports, interest rates, housing, all that kind of stuff. Peter Lynch, most famous top money managers in the world, he says if you spend 13 minutes thinking about economic forecast, you've wasted 10 minutes. Let's take a look at the crash, the 2008 crash. Take a look at this, see the market going down. In the year 2009, you guys remember 2009? Yeah? What kind of news stories were you hearing on the radio? If you switched on the radio or television, what were you hearing all the time? Was it positive or negative news? Negative, right? Exactly. All you hear on the news and television was fear, recession, depression, negative GDP, unemployment, low earnings. Guess what? Everybody hated stocks in 2009. Everybody. Almost everyone who was afraid were dumping their stocks and shares. Blood was on the streets. But at that time, insiders, remember guys, are the people, not the masses, but the classes. Right, the classes, the insiders were buying. Take a look at this. At the peak of unemployment in 2009, stocks went up 60%. That's a bit strange. 60% up, and unemployment is at the peak. And from 2011 to 2014, stocks went up 63%, even though we had a European crisis, Greece debt, and the USA lost a AAA rating. All right? So folks, remember, most people, here's why the news, by the way, here's why news media is completely pointless. Sorry about that. You guys can fix that? All right. Sorry. Here's why news and media is completely pointless, guys. Because what are they telling you? When things are good, okay, when things are good, all you hear is, oh, good news, right? When things are bad, all you hear is negative news. And again, when things are good, all you hear is good news. Well, how is that useful? How can you possibly make investment decisions with that? I'll try and use this. Can you guys hear me? Yep, all right. It's got a spare microphone here. Okay. So what's really going on, guys? Why is it that a good economy doesn't necessarily mean you'll have good stock prices? Why is a bad economy or a crisis the best time to start buying stocks? So here's what's going on. There are about 20 funds. By the way, guys, out of all the slides I'm going to show you today, this is probably the most important one, so pay attention to this one. What's really going on, guys, there are about 20 funds that can basically do 80% of the world's trading. These are the funds, these are the big guys who control the world, like Goldman Sachs, JP Morgan Chase. These are the guys who make the big decisions what happens. It's not President Obama, and it's not whoever party we vote for. I've never voted. And here's the thing. They have between $50 to $100 billion under management. Now just remember that. These guys employ the smartest people in the world to do all the number crunching. These guys are more smart than the government. These guys know, based on their statistics and based on their number crunching, what will happen next. So if they think that the reports that they have, the data they got, Again, remember guys, these are insiders. If they believe that all the facts and the data show that markets will go up and it's a good time to buy, they will start buying. The question for you is, well, how do we know when these guys start buying? So I'm going to show you today, guys, an objective and a scientific way for you guys to find out when the insiders start buying. Would that be useful to you? Okay, fantastic. I'm going to show that to you. Pay attention to this part. And by the way, I want to make sure you guys understand this, that when we buy, we're not buying junk. We're buying quality stocks, not junk stocks. Most people, by the way, probably people you know, friends you know, they buy mostly junk, like penny stocks, which most of them are garbage as well. We want quality stocks. Look at this, here's an example. I don't know if you guys are car enthusiasts, I'm a big car fan. Let me ask you, if you had a choice between a Bentley Continental and a Kia Ceed, which one would you choose? Who goes to the Kia Ceed, just out of curiosity, all right? Bentley? Yeah? I know you're probably thinking, the most common objection I get at this point is, well, hang on a second, Alessio, it's not even realistic. Bentley costs over 100 grand, over 100,000 pounds. True, but imagine this. Imagine if tomorrow Bentley Motors, which is used to be a British car, by the way, owned by Rolls-Royce. Imagine tomorrow they say to you, you know what, tomorrow we're going to have a 75% sale. Who'd be interested, just out of curiosity? Yeah, absolutely. Same with Mercedes, whatever car you like. Tomorrow they say we're going to 70% discount. Great, I'll buy a discount. But what is a quality business? A quality business is basically solid earnings growth, undervalued, they're cash rich, they've got low debts, and they've got growing sales. Companies like these. Now, whether you like them or you hate these companies, bottom line is all these companies like Apple, Microsoft, Intel, Coca-Cola, Caterpillar, all of these qualify for quality companies. They all have these kind of values, what I'm showing to you here, okay? And there's plenty more, by the way, plenty more stocks people have not heard about, which we buy as well. Now, so the next point is, when do we buy them, okay? We buy them when nobody else wants them, okay? Remember that. We buy these stocks when they're hated, when people are afraid, and when stocks are unpopular. Let me ask everybody here a question. So when do you think is the most important time when people would be hating stocks? Yes, a recession or a financial crisis, absolutely. And I do believe, based on all the facts we have, there will be another one this year after May 2014. Again, here's the thing I want you guys to understand. When that happens, there'll be blood in the streets. Remember what Rockefeller said? The way to make money is to, repeat after me, the way to make money is to buy when blood is running in the streets. Okay? All that means is when people are afraid. But here's a warning. Even though this sounds simple, the hardest part is the psychological part. Because why is it so? Here's the thing, guys. To invest successfully, you got to do the psychologically impossible. That means buy when everyone is afraid, sell when others are excited with greed. I want to show you two tools, very simple tools. Even a 12-year-old could do this, by the way. The children, by the way, that the previous gentleman, Anthony, was talking about, they could do this. So if they can do it, so can you, all right? This is so simple, I want to show you this. There is a method where you can find out the best time to buy stocks, and it's like a thermometer. Basically, just remember these two words, overbought and oversold, and remember these two indexes. One is called a market sentiment index, the other one is called a bullish percent index. It's like a thermometer. When this thermometer goes below a certain level, below 25, okay, say after me, oversold. Louder, say oversold. Okay, that means the thermometers come to a point, all right, where everybody who was afraid, everybody who could have sold has sold. There's nobody else left to sell, all right? You guys have heard of a saturated market, when the market's saturated? Yeah? It's the opposite. Okay, but keep it simple. All right, by the way, how many of you hate looking at charts and graphs, just out of curiosity? Okay, I got good news for you. Don't worry, so do I. But bottom line is, this is so simple. You don't have to know anything about charts, graphs. I'm going to show you a simple way you can do this. By the way, you can get this information for free too. There's a website called stockcharts.com, okay? And you can just plug in the symbols of this index. The symbol is I showed you earlier. By the way, and don't worry if you missed the symbols, I'm going to show you can download all this information. Would that be useful to you? Yeah? Okay. So here's what you do. On this index, on this chart, pay attention to the right-hand side. It goes from, let me show you. This goes from 0 to 100. What you want to pay attention to is when that chart, when that graph goes below 25%, or just 25 or below, okay? Are you all with me? If you're with me, say aye. Okay, good. Remember, guys, the 25% level on this first index is important. Okay, so here's what you do. When you go on that, just print this out. Go ahead, if you've got a printer, print this out, and then draw a line at 25% level, all right? Whenever this index, guys, this measures market sentiment. It shows you how ordinary people, the public, view the markets. The more negative it goes, and when it goes below 25%, it's not overbought. What is it? Oversold. Okay, that's when we buy. Take a look. It happened 3 times at least a few times in the last few years. In 2011, okay, 2012, 2012 again, and just one recently as well, although it didn't come all the way to 25. Okay? I'm not going to superimpose this on the stock market. Take a look at what happened every single time. Every single time this index comes below 25%, look what happened. The market bottomed, okay, and then what happened afterward? It rallied. Oops, it rallied. Every single one of those occasions which I've superimposed, they were buy opportunities. Do you see that? Yeah? And by the way, here's the interesting part. Every time people were afraid to buy. Why? Look at the first one. The first one happened in 2011 when I went on television and I said I'm looking to invest in this crisis. European Union crisis. The second one, Greece debt. Who remembers all these things, by the way? Just out of curiosity. Yeah. You guys remember the news some years ago? There was a fear that Greece was going to leave the euro. The fact is, every single time this index went below 25% and produced a buy signal. Insiders were buying when everybody else was doing what? They're selling. Or they're not interested. Most people stayed out. When do you think most people do get interested then? Yeah, when they hear what kind of news on television. Exactly. Last year, when finally the Bank of England and some other people came out and said, oh, the UK economy is back on track, that's when the mom and pop investors, the ordinary folks out there, that's when they, and I'm not just saying this because it's what I believe, it's true. The majority of the mutual fund money that's been going into hedge funds and mutual funds happened last year. Huge migration to stocks. But notice, by the way, guys, they missed out all the good opportunities. Let me show you. You're probably wondering, does it apply to the FTSE UK 100? Absolutely. Every single time that index goes below 25%, look at this. Oops. Look at that over there, right there. In 2011, 2012, right there, every single time, buy opportunities. Okay, here's a different one. This is just the last slide I'm going to show you before I finish. It's called the bullish percent index. Now, with the bullish percent index, what you want to do, remember this number, all right, guys? Remember 15%, not 25% with this one. This one is 15%, okay? Whenever this index goes below 15 or just at 15, what do? Let me hear you. What do? No? It's oversold. If it's oversold, are you buying or are you selling? You buy. Okay. Let's do this together, guys. I'm going to do this little thing together. So what I'm going to do is I am going to move this laser, if I can. I'm going to move this laser from the left to the right, and I want you to shout buy when you see the signal. All right, guys, you ready? Are we ready, guys? Yes or no? All right, let's go. From now, buy. Look what happened next, guys. What year was that? It was 98. That was the beginning of a major bubble. What was it? .com bubble. You guys remember that? Right. That was a buy signal right there. Then, there was a next one. So let me just zoom this laser here. Okay, here we go. And in 2003, I think that was. What do you guys do? You buy. Guys, notice it goes below 15% right there. That was a buy signal in 2000 and 2003. And the next one occurred in 2009. Look at this. Goes over here. And what do? You buy. Absolutely. Guess what? Most people who stayed away from stocks in 2009 because they were afraid, they missed out on 130% gain in stocks. But the insiders, at that point, what are they doing? They're buying when everybody else is selling. Now, here's the interesting part. Notice that we haven't had a major financial crash or crisis since 2009. Statistics show that after about 6 to 7 years, usually about 5, 6, 7 years, usually they have a major correction or crash. Based on a lot of the information I don't have time to discuss here today, I actually expect another major crisis to occur. Not as big as the one in 2008, but I'm expecting a 20 to 30% drop to occur this year. In fact, it was reported, when I said this, it was reported by the Huffington Post. Now, obviously I don't have time to discuss that, but bottom line is, guys, a major buying opportunity will happen this year. I believe it's going to happen between May and September. All right, so pay attention to it. What you want to do is go on that chart I just showed you and plug in those indexes and keep an eye on this. All right, was this useful to you, by the way? Yeah? I know most of you probably missed the parts about the symbols, so you can download all of this, by the way, from my website. That's leadingtrader.com/TED. Okay, so just put /TED after leadingtrader.com. By the way, I haven't talked about when to sell, did I? Did I? No. You need to know when to sell too. It's not good just knowing when to buy, but also when to sell. So on this download, which is for free, you can just download it. I've also put some sell strategies too. Very simple sell strategies. All right, guys? Thank you very much for having me. Appreciate it.